Everyone talk about getting 700. Some people talk about getting 750. But when someone say they have an 800 credit score, it sounds different. It sounds elite. It sounds rare. It sounds like something only financially perfect people achieve. And most people assume it's just about paying on time. They think if they never miss a payment, eventually they will hit 800. But here's the truth. Paying on time keeps you good. It does not automatically makes you elite. 800 score is not about one habit. It's about profile depth. It's about structure. It's about age. It's about mix. It's about how lenders view risk at a high level. And most importantly, it's about how consistent you behave over a long period of time. In this video, I'm going to explain how people actually reach 800 credit score, what separates average credit from exceptional credit, and what you need to focus on if your goal is not just approval, but premium approval. Because there's a difference between being approved and being preferred. My name is Therese Tsague. I'm the founder of Aggregate, and I help people build credit strategically instead of emotionally. And 800 credit score is not magic, it's not luck, and it's not about income. High income does not guarantee high credit. Credit scoring model measure risk pattern over time. The stronger and more predictable the pattern, the higher the score. To reach 800, you must understand three advanced areas: credit mix, account age, and application strategy. And beyond those three, you must understand optimization. Because once you pass 740, improvement become more precise. Let us break them down clearly. Paying on time is the baseline, not the difference. First, let us address something important. Paying on time is required, but it's not enough by itself to reach 800. Why? Because payment history prevents damage. It does not automatically build elite structure. Think of payment history as a foundation. If you miss payment, you cannot reach 800. But if you only pay on time and ignore everything else, you may stall in the low to mid 700. Elite score requires optimization, not just maintenance. And optimization is subtle. It involves tightening utilization, protecting age, managing inquiries, and spending depth strategically. Credit mix, what lenders like to see. Credit mix refers to type of credit you manage. There are two main categories: revolving credit and installment credit. Revolving credit includes credit card and line of credit. Installment line of credit include auto loan, personal loan, student loan, and mortgage. Scoring model reward diversity. Why? Because managing different types of debt demonstrates flexibility and control. Someone who can handle both structured installment payment and flexible revolving balances signal stability. To reach 800, more strong profiles include multiple revolving accounts in good standing, at least one installment account with positive history, possibly a mortgage if applicable. You do not need every type of account, but depth help. What matters is demonstrated experience, and lender trust experience. Depth versus minimalism. Many people maintain one credit card and think that is enough. It's enough for basic credit. It's not enough for an elite profile. An 800 score usually reflects multiple accounts, years of histories, low balance across several cards, demonstrated experience managing credit at different limits. It shows lender you are not new to the system. You are experienced. Minimal profile at 10. Thin profile carry uncertainty. Uncertainty reduce score slightly. Depth reduce uncertainty. Account age, why that matter? Time is most of the powerful factors in reaching 800. Credit scoring model measure average age of account and oldest account age. Older account build trust. If your oldest account is 10 years old and still positive, that's powerful. If your average age is 7 years, that's a long time stability. If your profile shows a decade of responsible behavior, risk perception decreases significantly. Closing all accounts can reduce your average age. Reducing average age can lower score. Opening multiple accounts in a short period lower average age temporarily. This is why patience is strategic. Age compounds quietly. You cannot rush age. but you can protect it. They keep all accounts open holds. Unless there is a strong reason, keep all the accounts open. If there is no annual fee, keeping it open preserves age. Use it lightly once in a while. Keep it active because once closed, the age contribution will eventually fall. When the account drops from your report years later, that drop can reduce average age unexpectedly. Time is leverage protected. Elite credit users protect their older account carefully. Utilization at the elite level. At 800 level, utilization discipline is tight. Balances are low, often below 5% overall. Sometimes one card reports a small balance, other report zero. High score reflect control usage, not heavy dependency. If you consistently report 30% utilization, even with perfect payment history, you may not reach 800 because a higher utilization signal reliance. Elite profiles show optional usage. Credit is available but not needed. The subtle distinction matters in scoring. Aggregate limit grow over time. Another factor often overlooked is total available credit. People with 800 credit score often have higher combined limit across multiple cards. Not because they carry debt, but because a higher limit combined with low balances reduce overall utilization ratio. For example, carrying $500 balances on a $20,000 credit limit look different from carrying the same $500 balances on a $2,000 credit limit. The ratio matters. Higher limit responsibly managed create caution. Caution creates risk perception. However, limit increase should be requested strategically, not clustered. Again, sequence matters. Application strategy, spacing, and timing. People with 800 score does not apply randomly. They apply intentionally. They use pre-approval to the space application. They avoid clustering hard inquiries. They understand that each application slightly increases perceived risk temporarily. Strategic applicants know when to stop. There's a point where additional cards add little value. Discipline includes knowing when enough is enough. When to stop applying. If you already have multiple strong revolving accounts, an installment loan, and solid age, additional application may not improve your score significantly. Sometimes restraint is part of elite behavior. You do not need every offer, you need structure. Chasing welcome bonuses at the expense of profile stability can delay reaching 800. Momentum matters. Protecting momentum matters more. The role of mortgage in high score. Many 800 profiles include a mortgage in good standing. Why? Because mortgage represents long-term structured debt. Managing a large installment loan responsibly signals strong risk management. It shows you can handle large obligations over decades. However, you do not need a mortgage to reach 800, but diversified profiles tend to score higher. Depth and duration increase confidence in your profile. Inquiry at high score level. 1 or 2 inquiries rarely destroy strong profile, but frequent inquiries increase risk. High score profile avoid a lot of application. They understand momentum. They protect their profile before large purchase. If planning to apply for a mortgage or auto loan, elite credit user often post application for 6 to 12 months prior. Preparation is part of the strategy. Long-term planning versus short-term boost. Reaching 800 is not about hacks, it's about planning years ahead. If you know you want premium finances in 3 years, you begin protecting credit utilization and limiting inquiries now. Elite credit behavior is proactive, not reactive. You do not wait until you need the score. You build it before you need it. That mindset difference separates good from exceptional. The difference between 740 and 800. A 740 score is strong, often enough for good approval. An 800 score reflects exceptional stability, lower utilization, longer age, broader mix, fewer recent inquiries, and more depth. is the difference between good and excellent. It may not always change interest rate dramatically, but it signals maximum trust. Maximum trust increases negotiation power and leverage matter. People with elite credit treat credit as tool, not as an emergency funding. They will not max out card impulsively. They do not apply out of boredom. They maintain structure. They check report periodically. They monitor utilization before statement close. They anticipate how action affects stories. Their discipline shows and discipline builds trust. Elite credit is behavioral consistency. Building toward 800 step by step. If you're in the 600, focus on cleaning error and lower utilization. If you're in the 700, focus on aging account and tightening balances. If you are above 760, focus on consistency and protecting age. Reduce balances even further. Avoid unnecessary application and allow time to compound. Each stage requires different discipline. Progression is layered. Common mistakes that block 800. Closing account too early. Carrying high balances occasionally. Applying frequently for reward card. Missing one small payment and underestimating impact. Allowing account to become inactive and closed by issuer. All of these disrupt momentum. Consistency over years creates elite score. No burst of improvement. Realistic expectation. You cannot jump from 620 to 800 in a year. It's a progression. But once you cross over the mid 700, incremental discipline can move you higher over time. Sometimes the final move from 780 to 800 takes longer than moving from 650 to 700 because optimization becomes precise. Patience is part of the strategy, the bigger truth. An 800 score is not about perfection, it's about predictability. It signals that lenders see minimal risk, minimal volatility, minimal uncertainty. It's stability measured over time. It reflects disciplined behavior repeated consistently because elite discipline is rare. If you want to reach an 800 credit score, focus on perfect payment history, low credit utilization consistently, protect account age, maintain a healthy credit mix, and apply strategically. Increase limit responsibly over time and knowing when to stop applying. Elite credit is not loud, it's structured. Is discipline, is predictable, and predictability builds trust. If you need help reviewing your profile and building a long-term path towards 750 and beyond, click the link down below and book a personalized credit section with America Credit Care. We build structure because structure creates leverage, and leverage creates premium approval. Move with knowledge, not emotion. That's how you win.